let's get right into it here. Market is slightly up here, 0.2% on the S&P. Looks like Nasdaq and semis did a lot better today. Small caps continues to struggle along with the biotech and retail, and some of these tech stocks are up. Looks like notably though, Nvidia continues to make a move here, and Tesla's up about 3%. Looking at Spider here, 65-minute chart. Looks like, you know, we gapped up this morning here. As you can see, this is where we closed. We gapped up to here, faded back down. However, the gap area in this vicinity acted as support. That micro term, I think, you see that lower wick here. Micro term has been really supporting the buyers here in the last several dips, as you can see.
Perfect.
That was 3rd hour, 4th hour, 5th hour, and 6th hour. We did see a little bit of rally on the 4th and 5th hour. 6th hour, we faded back down. We do have a little bit of shooting star here. And so, obviously, that shooting star candle could mean absolutely nothing without the follow through. You see, we had a similar candle right here. On this day, it really meant nothing without next day follow through. So this shooting star could mean something if we see probably the best bet for the sellers. If you're a seller here, we got this micro resistance, probably gapping it down. Even slight gap down might do the trick and keep that gap open, the down gap. And if we do see that pressure in the 1st and 2nd hour to the downside, I could see the micro term getting retested again. As long as the bulls can protect, they don't have to protect all of this up gap, but at least, you know, some of it. There's still a good chance, and we still want to give benefit of the doubt to the buyers. This up gap is a gap that bulls want to protect if they do want to see some bullish runs in the month of May. Do that, you can see that's a micro term, that's a short term, that's mid term, that's long term, right? Once we start to see, you know, the price start really violating the micro term, you know, and getting below the micro term, short term, I think that's when you start checking the mid term and the long term, where you see a lot of that trend shifting happen right here when we saw that reversal to the upside, and then we reclaimed all the moving averages, and then we came down, we held the midterm here, and then you see the micro term and the short term, they start to get respected, sort of like you know, it has sort of like its way of stepping up and seeing which moving average is going to stick, right? Because, you know, when we fall down, you can even see how it sort of comes down in a different level. First the short term, and then retest the micro, and micro start coming down, right? And then as we make a move, we thrust higher, and then, you know, you see the short term gets respected, and then we blow through the micro, but then we got the midterm. You see the midterm are getting retested, and then we get back up above the micro and the short term, and then you see right here how that micro short term was respected, and then that's when the trend fully reversed.
Perfect.
To the upside, right? Boom, micro, boom, gapped up, coming down close to the micro, we're here. So that's sort of how you see where we're at as far as overall trend is concerned, right? That's why you can't just start calling bearish without any kind of evidence of that. And that's, you know, that's something you see quite a bit if you're roaming through social media streams. And so that's why market isn't gonna just, I mean, unless of course there's certain variables that where market can be killed out of nowhere, but those are rare situations, right? So we want to continue to sort of lean on the higher probability outcome, right? Let's see what the oscillator looks like here. So you know, we do have the bearish divergence. But we also have to understand bearish divergence. When the bearish divergence happens, especially in the 65-minute chart, while the price is above the micro term, you see above the micro term, it might lose its potency. So you can see we had actually pretty definitive bearish divergence here. You see that, right? This is a definitive higher high on the price. We got a definitive lower high here, and that's a pretty clean signal, right? It's a clean divergence, right? But then again, it got nullified because the micro term was right there to prop itself up. And once that oscillator crossed back up, what happened? Boom, another rally.
Perfect.
So we got the initial divergence here, at least the formation. But you see that oscillator, it's sort of giving us the neutral stance, right? It hasn't crossed up or down yet. It's just that it like neutral tick on that slow line, right? So they've met. So we're just waiting on what's going to happen tomorrow. The oscillator is going to wait on what's going to happen tomorrow. If we see a pop tomorrow, that's going to cross back up. If we see a continuation to the downside, it's going to sort of come right back down, right? So we're sort of on that neutral ground. I think a lot of that you're going to find out in the first 2 hours of market opening. That's where it's going to set the tone for the day. But overall sense, despite the fact that we do have a bearish divergence here, we do want to give benefit of the doubt to the buyers. And then tomorrow, we'll have to, look at the market, reassess the situation, and see where the market is possibly going.